So let's talk about Andre McClendon, the self-proclaimed watchdog of the trading world who decided the best way to clean up the space was by throwing shade on everyone with a Wi-Fi connection and a brokerage account. About a year ago, Andre started a YouTube channel with a mission: expose fake gurus. Scroll through his thumbnails, and it's just exposed. Scam, fake, furu, over and over again like a broken record of accusations. At first glance, it seems noble. The idea of weeding out bad actors in trading is something we all want. But here's the real grift. Andre cries scam at anyone with a payout, a platform, or, God forbid, a course, all while chasing clicks by doing the exact thing he claims to hate. It's performance art dressed as public service.
He's not verifying. He's not investigating. He's just lobbing accusations like hand grenades and hoping the algorithm catches the shrapnel. Because at the end of the day, Andre's not exposing scammers. He's just competing with them. And the only thing he's actually selling? Suspicion, outrage, and a steady drip of YouTube monetization dressed up as moral high ground. Call it what it is, a scam about scams. According to Andre's sacred fake guru checklist, the red flags are imaginative, to say the least, heavily discounted products, scam. Because nothing screams fraud like using a proven marketing strategy that literally every industry on earth uses. Price ends in a 7? That's apparently the universal sign of deception. Who knew math could be fraudulent? Posted a day in the life of a trader vlog. Oh, that's definitely a scam. Real traders don't have days. They exist outside of time, materializing only when liquidity appears and vanishing with a close. It's like he reverse engineered his list from a BuzzFeed quiz titled, "Are you a furu or just a guy with Wi-Fi?" And here's the thing, it's lazy. There's a difference between genuine accountability and turning everything into clickbait.
Andre's accused some of the biggest names in trading: Stephen Ducks, PBI Investing, Corey, Tanya, and even JadeCap. You know, JadeCap, the guy who had a $2.5 million payout from Apex and has shared hundreds of videos walking through his trades, market logic, and personal growth as a trader. But apparently that's not enough, because Andre took one look at his content and said, meh, not sure if he's legit. What was the red flag? Following ICT? Having a course? Not streaming every second of his life? Andre calls that suspicious. We call that being a human. JadeCap may not be flashy, but his process is sound. And unlike most furus, he's not out here selling you dreams on a jet ski. He's building a library of strategies and frameworks. And for those paying attention, he's showing his evolution as a trader in real time. But Andre doesn't dig that deep. He just scans social media, spots a payout claim, and jumps to conclusions faster than a beginner with a funded account and no stop loss.
And it's not just JadeCap. Peachy Investor gets the same treatment. Her vibe, totally different. She's not shouting Lambo life into her ring light. She's running a farm, raising a kid, and sharing trading tips with an audience that clearly connects with her energy. But according to Andre, the absence of live trades means something shady is going on. Her latest video, titled 24 Hours with Me, Live Day Trade, Farm Chores, and Big Life Update, is basically Joanna Gaines meets Ninja Trader. Like if Fixer Upper had a crossover episode with Wall Street Bets. You'll come for the trades and stay for the baby cows.
What are you doing? Fast forward to me shoveling a bunch of shit. I'm gonna take an early entry.
Order filled.
Oh, here's the little ones. They're making their way down. What are you doing? What are you doing? Do you want love now that you ate? I'm gonna go ahead and move the stop up to that last support base near like 60.19.
Now, apparently, Andre McClendon, YouTube's self-appointed furu hunter, watched 2 videos and decided Peachy was faking it. Why? Because there were no live trades. Except, plot twist, there were. She was literally in active trades for more than half the video. Not hypotheticals, not screenshots, entries, exits, stop moves, price commentary, the whole Trader Joe's sampler.
Let's go to the numbers. That day, over $10,000 in realized profit. The day before, a casual $20,000 plus. And to her credit, she even says in the video, this isn't every day. These aren't typical results. She's not out here pretending every trade is a moonshot. Just solid execution, shared transparently. But no, let's ignore all that because she has a cute aesthetic and feeds chickens on camera. I'm sorry, is that illegal now? Peachy isn't out here selling yacht dreams or NFT nightmares. She's showing how to trade from home with a baby on her hip and a rooster in the background. Like a financial Cinderella story, but with more chart patterns and fewer glass slippers.
But here's the best part. She ends the video not with a hard sell, but with real advice. Paper trade if you're new. Use micros. Zoom out. Have a plan. Peachy didn't pitch a 6-figure signal service. She didn't brand herself as a trading guru, and she's definitely not selling snake oil out of her barn. She's just a trader, one who happens to know her way around both a candlestick chart and a chicken coop. And if that offends your favorite YouTube detective, maybe the problem isn't her transparency, maybe it's your insecurity. Because if a mom in muddy boots can outtrade you while wrangling livestock, that's not a scam. That's just impressive. And hey, fair being fair, let's rate Andre on a similar system. Does he watch the full videos of the people he exposes? No. Does he evaluate their trading programs with any real scrutiny? No. Does he do anything that remotely resembles investigative reporting? Nope. Well, there you go, Andre McClendon, exposed, scammer of scammers. Let's be honest, not all prop firms are created equal. In 2023, the industry exploded. Now in 2025, we're seeing the fallout. Affiliates are leaving top one. Other firms are closing ranks. Why? Because people are waking up. It's not just about flashy rules or cheap resets anymore. It's about trust. It's about sustainability. It's about protecting traders and the future of prop trading. At Futures for Our Future, we don't promote every firm under the sun. We've picked a handful, not perfect, but proven. These are the prop firms we personally use. We've read the fine print, tested the payouts, and spoken directly with the people behind the scenes. Because affiliate marketing isn't just about commissions. It's a responsibility. We owe it to our audience to recommend firms with real business models, not pop-up cash grabs with countdown timers and broken promises. The truth is, too many prop firms dilute the industry. They burn traders, stall payouts, and damage the reputation of everyone involved. So we've made our choice, and we hope you'll join us in building a better, more honest future for traders. Check out our verified prop firm partners at futuresforourfuture.com. Use code FFF to get the best deals on the firms we actually trust.
Oh boy, buckle up, traders. Because today's story has everything. Government overreach, missing emails, $31 million in taxes, and a regulator so shady they make offshore brokers look like librarians. So picture this. It's August 2023. The CFTC, aka the Commodity Futures Trading Commission, aka Wall Street's Hall Monitor, decides it's time to flex. They come after My Forex Funds, a heavyweight in the retail prop firm world, with a full statutory restraining order. Translation? Asset freezes, business shutdown. The whole Judge Judy treatment.
You sound like a fool.
I don't, because I know what I'm saying.
Are you trying to sound like a fool? You sound like a fool.
I'm trying to sound what it is.
You sound like a fool.
That's your opinion.
No, my opinion's the only one that counts.
So get this. The CFTC's investigator claimed that My Forex Funds transferred 31.5 million Canadian dollars, that's like 23 million in the US, to something they ominously called an unidentified CASME account. Ooh, mysterious. Sounds like a villain lair with offshore Wi-Fi, right? Except, plot twist, that money went to the Canada Revenue Agency. Yep, it was just a tax payment. So case closed, no harm, no foul, right? Not even close. The CFTC knew it wasn't a shady transfer before they filed the case, and still told the judge it looked suspicious. Because nothing says protecting the public like accusing a company of stealing customers' money when all they did was pay their taxes.
Let me be clear. They filed a federal enforcement action based on a claim they already knew was false. Then they doubled down. Then they testified about it under oath. Then they kept using the lie in court arguments for weeks. And when they finally decided to correct the record, they didn't apologize, they didn't issue a bold correction, they hid it in a footnote. Footnote. I mean, when your integrity correction looks like a pharmaceutical side effect disclosure, maybe you shouldn't be policing integrity. And I know what you're thinking. Well, at least this was just one bad call. Sure, except that bad call shut down one of the biggest prop firms on earth, stranded tens of thousands of traders, and nuked the company's reputation. Now, let's pause the story there to have a teachable moment.
Now, remember a few weeks ago when Michael Patak, CEO of TopStep, floated the idea of a self-regulatory organization for prop firms? Yeah, the community lost it. No one was exactly thrilled about giving regulatory power to a bunch of CEOs who also sell evaluations. But on the flip side, can you blame the firms for wanting to protect themselves? Because clearly, My Forex Funds was targeted. And yes, this is a cherry-picked example, but it's a very juicy, government-sanctioned, multi-million-dollar cherry. If the CFTC, with all its lawyers, layers of oversight, and official badges, can abuse power this badly, what happens when regulators set their sights on the future's prop firms? Look, traders and prop firms don't always get along. I get it. You want payouts? They want rules. You want freedom? They want KYC documents that don't look like they were forged in Microsoft Paint. But here's what we all agree on. We don't want good firms getting nuked by regulators.
And now for the rest of the story. Thankfully, My Forex Funds had a guardian angel, dressed in a judge's robe, looking out for them. And let's just say, he did not appreciate being lied to. Who would have guessed? Judges, big fans of the truth. The judge took one look at that steaming pile of misrepresentation and was like, oh no, not in my courtroom. So what did he do? First, he cut back the asset freeze. Then he fired the receiver, the court-appointed human padlock they put in charge of My Forex Funds. And finally, he basically turned to the CFTC and said, you came in here with a story about criminal fraud, but it looks like the only fraud happening was you.
But wait, there's more. The court also noted that the CFTC could have corrected the record at any point. Like maybe when they got the email from the Canadian regulator saying, hey, FYI, this was just taxes, or when they kept using the lie in multiple filings, or I don't know, maybe before they testified about it under oath. Instead, the CFTC waited months and buried the correction in a footnote. A footnote, like, oops, our bad, just casually ruined a company, see citation number 2. And the consequences? Oh, they're finally catching up. The judge slammed their credibility, said their mistake undermined their entire case, and basically told them, you don't get to show up to court with a flamethrower and say, oops, I thought it was a flashlight. And now, instead of My Forex Funds facing sanctions, it's the CFTC that's in hot water, including potential penalties, mandatory corrections, and possibly having to pay the company's legal fees, because nothing hits harder than consequences in invoice form. So yeah, the CFTC might have walked in like the hero, but they're walking out looking like the villain.
Hey everyone, about a month ago, we launched our brand new website, futuresporourfuture.com, and since then, it's become an essential tool in our daily trading routine. In a recent team meeting, we were talking about our favorite features, and we realized we should just show you. So let's take a quick tour of the site and walk you through the tools we use every single day. First up, our Compare section. This is where you'll find our updated lists of prop firm payouts and rules. Honestly, I check the payout section at least once a day. It's just so easy to forget the specifics, and having everything in one place makes a huge difference. Take my Apex 300K accounts, for example. All I have to do is hop in, look up the payout chart, and boom, I know exactly what number I need to hit. If the max payout is $3,500, I know I need to get that account to $310,600 to trigger it. No more guessing, no more digging through FAQs. It's right there. Next, the economic calendar. And this is where things get powerful. You can view daily economic events, filter by importance, and even track market sentiment at a glance. But my personal favorite, the heat map. I keep it open all day. It gives me an instant read on how sectors are moving. So if I see tech turning red, I know shorts might start playing out on NQ. It's fast, intuitive, and constantly updating. Just what you need when timing matters. And don't forget the prop firm comparison page. This is where we show you the best deals available right now. You can filter by firm, rule type, payout structure, and more. And today, the best bang for your buck is the $97 Tradeify account. We keep this list updated constantly, so you always know where the real value is. We built futuresporourfuture.com to answer the questions we were getting all the time. What's the payout rule again? Which firm has the best deal this week? Where can I find today's market movers? And now, we honestly don't know how we lived without it. So, if you're looking for a smarter way to navigate the prop firm world, or just need one place to keep your trading resources organized, check it out. Like, share, and subscribe if this helped you. And if you use the site, don't forget to support us with code FFF at checkout. It really does make a difference, and we're beyond grateful for your support. Thanks again, and back to the show.
So get this. There's a brand new prop firm in town called Thrive Trading Group, and it was launched by Joom Trading, which, by the way, sounds less like a YouTube trader and more like a villain who vaporized Janet Yellen. But in real life, he's actually a legit trader, public face, posts his trades. And he's been talking about launching this firm for months, which is comforting, because in the prop firm world, the bar is literally, has this person ever traded? Or did they just learn what a candlestick was last Thursday? Now, Thrive is what's called an instant funding firm, which means, get this, you don't have to go through an evaluation. You just pay, like a nightclub cover charge for traders. Swipe your card, enter the arena, and boom, you're funded. Because who needs months of psychological torture when you can just buy your trauma up front?
And Thrive doesn't just hand you an account, they give you options. You've got end-of-day accounts or, and this is where it gets interesting, swing accounts. It's like a Cheesecake Factory menu for risk management, overwhelming, oddly specific, and somehow exactly what you didn't know you needed. So if you want to trade overnight, go with a swing account. Prefer to sleep without sweating through your sheets? Stick with end of day. Want both? You can load up with 5 of each. That's right, 10 accounts total like a true high-functioning degenerate. Now here's where things get juicy. Thrive decided that just giving you a payout wasn't generous enough. Nope. They went ahead and created something called the Trader Bank. It's a built-in bonus system. Basically, a very lucrative cherry on top of your trading Sunday.
Basically, the Trader Bank is like a piggy bank, except instead of nickels and dimes, it's stuffed with serious cash. We're talking 50% of your payout, just dropped in there. So if you withdraw $1,500, you keep every cent of it, and Thrive still tosses another $750 into your piggy bank. I know, crazy, right? It's like if your boss handed you your paycheck and then secretly slipped you a Target gift card with a wink and whispered, "Don't tell HR." And I know what you're thinking. How do you get that bonus money? Do you need a hammer to smash this piggy bank? Nope. Just keep trading. Once your Trader Bank hits $30,000, you've got 2 options. Withdraw it with an 80-20 split. Or, and here's the plot twist, join their Thrive Fund Incubator, where you can start trading live. Yes, they're calling it the incubator because apparently you didn't show up to pass challenges, you showed up to hatch an empire.
Here's how it works. Step 1. You grow your Trader Bank to $30,000. Step 2. Thrive funds you with that exact amount, $30,000 in live capital, and lets you keep 100% of your profits. That's right. No split. No middleman. Just you and the market, baby. Now you're trading real capital like a real fund manager. And if you're thinking, wait, this sounds suspiciously like actual opportunity, hold on. It gets better. Thrive reviews your performance and scales your account like it's on creatine. $100,000 after 6 months, $250,000 after 12, $500,000 after 18, and $1 million after 24 months. Yeah, a million, as in 7 figures. As in, why, yes, I do own multiple monitors and an espresso machine that costs more than your car. But wait, there's still dessert. Step 4, launch your own fund. Thrive says, you've proven yourself, now go be the boss. They offer legal help, operational support, investor connections, basically everything short of a reality show titled Trader Island, which I would absolutely binge, by the way.
But wait, we've oversold the ending. You were probably expecting something terrifying from the incubator like snake eggs, and instead, we made it sound like it's full of unicorn babies. Because obviously, unicorns hatch from eggs. Shh. It's a fantasy, don't ruin it. Anyway, let's rewind to the hard part. Math. And if you've already crunched the numbers, first of all, I'm proud of you. Second, it takes about 5 full payouts per account to hit that $30,000 bonus. But if you've got all 10 accounts working together like synchronized swimmers at the Olympics, you can get there in just 3 rounds. Boom, you're in.
Now, if you're thinking that math ain't mathin', you're not wrong. I forgot to mention, Thrive has a 25% consistency rule, which basically means you don't have to hit your profit target in 10 perfectly spaced trading days. You can crush it in 4 giant leaps and coast the rest. It's like walking on the moon, but with trading. Now let's talk risk. You've got a trailing drawdown, but it's end-of-day based, not intraday. So if you spike down in the middle of the day but recover by the close, you're fine. Like emotional trading, but with a therapist.
On the other hand, you also have a daily loss limit, which is a soft breach, meaning you don't lose the account. You just get sent to timeout until the next day. No TV, no Fortnite. Just think about what you've done. But here's the kicker. Once you get your first payout, they remove the daily loss limit altogether. That's right. No more training wheels. Now, for those of you with ADHD or commitment issues, hi, it's me. Here's the quick breakdown. You can trade on Rhythmic-compatible platforms like Quantower and the usual suspects. But no, Tradeovate isn't available yet. All your favorite trading instruments are available like Bitcoin, indices, oil, and gold. Payouts come within 48 hours. And yes, you can DCA, flip, and even trade through news events. Just no collusion, no hedging, and absolutely no blood sacrifices to Jerome Powell. We've talked about this.
With prices starting at just $325 for a $50,000 account, this direct-to-funding prop firm might not be for everyone. In fact, beginners, just run. Now go watch some YouTube tutorials and come back when you stop calling every green candle a breakout. But if you've reached profitability and you're ready to put real capital on the line, Thrive might be exactly what you've been waiting for. And as for Joom, major props. You didn't just launch a firm, you gave traders a new path. Transparent, community-backed, and refreshingly human. If you want to learn more, visit Thrive at www.thrivetrading.com. Thanks so much for watching. If you enjoyed this episode, click here to check out another great video or explore our full playlist for more. Watch time means the world to us, so please share this with your trading buddies. And if you don't have any, just watch it again yourself. Remember, trading is tough enough. We all deserve more laughs. Thanks again, and see you next week.